call it a Goldilocks policy for a Goldilocks economy. RBI Governor Raghuram Rajan today played to the script, cutting benchmark interest rates by 25 basis points. Banks led by SBI were quick to take the cue, but what dominated the day's proceedings was Rajan's hawkish commentary on inflation. In its bi-monthly monetary policy review, the RBI raised concerns over inflation, saying prices could spiral in the days to come thanks to a weak monsoon.
Rajan also made it amply clear that there is hardly any headroom left for further rate cuts this year, despite slow growth. Add to that the IMD's forecast of below normal monsoon, there was collateral damage on the Lal Street. The Sensex tanked over 2 percentage points in an all-round selling, the double whammy of a price rise and rain train, and a meltdown in equities. And all of that put together in a nutshell with the RBI in focus is our top story right here on Business Tonight.
If I cut interest rates, it's because I want to please the government. If I don't cut interest rates, it's because I want to have a fight with the government.
War or peace, the RBI's much-anticipated rate cut came with more bad news than good, with the governor himself calling it a Goldilocks policy. The only good news was the 25 basis point cut in the repo rate.
Banks have started passing through some of the past rate cuts into their lending rates. Headline inflation has evolved along the projected path. The impact of unseasonal rains has been moderate so far. Administered price increases remain muted, and the timing of normalization of U.S. monetary policy seems to have been pushed back. With low domestic capacity utilization, still mixed indicators of recovery, and subdued investment and credit growth, there is therefore a case for a cut in the policy rate.
In fact, it was the hawkish stance of Rajan that dominated the market sentiment. The government gave enough hints that Tuesday's cut could well be the last one this year. Taking a cautious approach on the impact of a weak monsoon, the governor reiterated that further policy moves will be driven by the government's response to a possible spike in food inflation due to deficient rains.
The biggest uncertainty at this point is the outturn of the monsoon, but also the policy reaction. So we need to figure out how this plays out. And clearly government action is very important, because I think the link between all these has been broken by appropriate government actions.
Even the government is not leaving anything to chance.
The government and the RBI agreed that these cuts signify that the economy needs policy support should the monsoon be as bad as some people fear. We don't know how it's going to pan out, but I think the government will certainly act to contain the inflation risk.
But even if banks play ball, the token rate cut may not be enough to boost growth. After all, even the central bank is not too optimistic about a spike in demand soon.
The biggest uncertainty that is staring at RBI today is monsoon and how the government responds to possible supply-side shocks arising out of deficit monsoon. And also, will banks pass on the remaining rate cuts to its customers? All these will decide whether Governor Rajan will go for another rate cut before the end of this financial year. For now, economists and analysts are pricing in a rate cut only in the Jan-March quarter. Gopika Gopakumar, ET Now, Mumbai.
All right, let's get to a quick expert perspective on the RBI's monetary move, and our consulting editor Mythili Bhusnurmath is joining us right here on Business Tonight. Mythili, do you believe Rajan has merely obliged, and given the macroeconomic scenario, he should have perhaps gone for a higher rate cut? Could he have actually overwhelmed with the higher rate cut instead?
Well, I'm not sure there's a case for a larger rate cut, but what there certainly would have been a case for doing something on the liquidity front, and also for the RBI looking a little bit more proactive rather than reactive. So I'm a little disappointed, somewhat like the markets, because the RBI seems to be unduly conservative at a time when I think this unconventional monetary policy is the name of the game. The Reserve Bank seems to be very conventional, and that's where my disappointment really lies.
Mythili, has he also kind of been behind the curve? You know, has he raised the bar first monsoon, then the Fed rate hike now? Has he been behind the curve and squeezed his window of opportunity really to cut rates? What next now?
Well, I don't think he had really had much of an option, because given the fact that the Fed is expected to raise rates, certainly by the end of the year, if not by September, then there really isn't very much scope. Given the fact that monetary policy transmission does take close to 3/4 is what they say in the Indian context, where is the scope? Maybe he needn't have spelled it out like that, but the fact is that is the reality.
All right, Mythili Bhusnurmath, always a pleasure to chat with you on your special take, an expert voice that's really coming in.